We're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist over at Standard Bank. Thanks so much, Nomvuyo, for joining us this morning. Well, the Rand seeing some reprieve yesterday. So let's recap on some of the factors that came to bear in terms of the Rand movement that we did see and what are the likely contributors today and where that local unit is headed.
Morning, Alishia. Yes, the Rand did recover slightly yesterday. What we saw was a brief recovery in appetite for risk, a global sentiment, and you know that is always crucial to the Rand's movement. Seems that the market expects some sort of silver bullet or some encouraging comments today. There are quite a number of statements to look forward to. We have policy meetings that take place, BOE and ECB. We also have Governor Ben Bernanke speaking later today. There's also a highly anticipated speech by the US President Obama. So, of course, depending on how the market reacts to those comments, what the content of those statements are, we could see the Rand either strengthen quite considerably if there are additional stimulus measures that are announced today, or on the other hand, we could also weaken quite significantly should those comments spark a fresh bout of risk aversion.
Of course, quite a bit on the global front that will be hitting the markets today. Having said that, we've got quite a bit of local data to consider as well, and that coming in the form of SACCI's business confidence numbers, mining and manufacturing data as well. So how will you be sifting through that in the context of all that's playing out in that global space?
Well, given the timing of events, I think the market will largely be digesting the local data for the earlier part of the day. As you mentioned, there's SACCI business confidence numbers, we have mining and also manufacturing data. Unfortunately, we're not expecting fireworks from either the mining or manufacturing data. This is the data for July, and as you'll recall, strike activities that began or sparked in that month. So those production figures could be adversely affected by the lost production days that occurred in July. So we'd be looking for some declines, additional declines in output, and those sectors were already under pressure, as we saw from the second quarter GDP numbers. So today's numbers are unfortunately likely to be quite disheartening, and we could see the Rand take a bit of a knock from that. But of course, there are those all-important statements with regard to global policy that will tend to follow in this latter part of the day, and we're hoping that that might lead to some relief and some recovery in the local unit.
When it comes to global policy, we've been talking at the desk just how bold President Obama, more so than anyone else today, is likely to be. What are you expecting on that front?
Well, the problem with that really is, as one of your earlier panelists alluded to, is the fact that President Obama is really constrained by the state of politics that prevails in the US currently, and there's a lot of division over the raising of the budget ceiling, and there's likely to be some controversy over his plans that are going to be announced today. So there probably will be a limit as to how bold he could possibly be. There is an expectation that he will announce at least $300 billion worth of stimulus and tax cuts. And of course, should he announce something less than this, something less impressive than that amount, then we could definitely see markets react negatively. But I think that he is constrained by the state of US politics at the moment.
When it comes to support factors, though, for the local unit, Nomvuyo, we've had obviously a strong foreign inflows into the bond market that's been supportive. How are you reading that trend right now, and whether or not it's sustainable given all that's playing out in the global arena?
Well, generally what you see in terms of turmoil is investors looking for some certainty in terms of their yield, and we believe that that's been one of the main drivers that have continued to see strong inflows that we're seeing into the South African bond market. So we don't see that dissipating in the short term, particularly since you know, this global situation and uncertainty doesn't seem to be going to be resolved in the short term. So we should continue to see these inflows, and of course, in South Africa's interest rate differential with most developed countries and even a number of emerging market countries, remains quite favorable. So in the short to medium term, we see these flows continuing. But of course, should the Reserve Bank cut rates, as the market is now expecting, then we could see a brief drying up in these flows. But for the moment, they do seem to be quite consistent, and we're not expecting a sharp reversal anytime soon.
Well, we've seen Reserve Bank Deputy Governor Seckam coming to the fore this morning, saying that there's no reason why foreign purchases of government bonds, which have supported the Rand currency, should not continue. He says the Rand currency is certainly not competitive at the moment, but at what level it should be, he doesn't know. So those comments that you've just made reiterated on that end. Nomvuyo, thanks so much for your time. Nomvuyo Guma, Macroeconomic Strategist over at Standard Bank.